Welcome to this Skillick Explains video. This time I want to take on a topic which isn't new now, but is an important one nonetheless. We've had a few weeks of the stamp duty holiday, so a reminder about how it works, who it's designed to benefit, and one or two things to watch out for, particularly if you're thinking of buying a property in the near future. So the background of this is what? Well, I probably don't need to tell you that in response to the coronavirus, Rishi Sunak, the Chancellor, launched a whole raft of measures, and one of them was a stamp duty holiday, which took immediate effect from the 8th of July this year. Now, the impact is what? Well, unless he changes his mind, until the 1st of April 2021, stamp duty has been lifted on property purchases up to £500,000, and I'll recap the significance of that in just a moment. And this is good news basically for a lot of buyers. Stamp duty is a tax, it's paid to the government, it's not recoverable. As a buyer you have to pay it in cash, it's a cheque, there's no way of doing it on credit if you like. So removing that for a significant number of buyers removes one of the bigger cash costs associated with buying a property. Now why has he done this? Clearly it's good news for people who were previously going to have to write a cheque for stamp duty and as of now don't have to. So why do it as the Chancellor? Well, the reasons are varied. The UK economy recently suffered its worst quarterly GDP fall since records started, GDP being a measure of output or wealth, depending on who you talk to. So the backdrop was pretty hideous, and property ownership levels in the UK have always been high compared to many other European countries in particular. So we are a nation that views our home as our castle, if you like. And if prices stall or fall, given a lot of people own property, given that a lot of people's confidence, if you like, and spending is thought to be predicated on stable and or rising house prices, Rishi Sunak took the view that were house prices to take a big hit, right when GDP was taking a big hit, consumer confidence could collapse, and that could be pretty catastrophic for the UK economy. So what's the deal? Just a reminder, this isn't new news, but what was the deal that's been done on stamp duty? Well, the normal 0% ban for stamp duty, there was a threshold, if you like, where you didn't pay any stamp duty. Normally, and we think this will kick in once the holiday ends, that applies up to £125,000 or £300,000 for first-time buyers. Now that was true before the stamp duty holiday. In a nutshell, and simplifying very slightly, I'll clarify that in a moment, this stamp duty 0% band, if you like, now applies up to £500,000. That's the purchase price of the property. And these changes, importantly, apply to all home buyers, and according to the government, would mean that 9 out of 10 of them should be exempt from paying stamp duty while the stamp duty holiday lasts. So quite a significant move. Now what's the saving? Well, it depends basically on the value of the property, and it does depend a little bit on who's buying it. But to summarise, let's say a home costs £400,000. That's the agreed price at which it's going to be purchased. Just to be clear, that's not the asking price. It is the price at which exchange of contracts will take place. Pre this holiday, the stamp duty would have been £10,000 for a non-first-time buyer, and £5,000 for a first-time buyer, bearing in mind that for a first-time buyer, remember, up to £300,000 of that £500,000 escaped from stamp duty, slightly less than that for somebody who is a non-first-time buyer. Well, now it's zero for both until the 1st of April 2021, and he may even, there are rumours about him extending the stamp duty holiday, but certainly up until that point, you've basically got a zero band, effectively. So who's going to benefit? Well, sellers have benefited. Now you might say, well, hang on a minute, isn't this a move designed to help buyers reduce the amount of cash they pay up front on this tax called stamp duty? Well, yes, but sellers, sensing the opportunity, have, it seems, been able to raise asking prices, tending to take the view that, well, if buyers are not having to write a cheque for stamp duty, then they can write a bigger cheque to the person selling the property. So law of unintended consequences there, and historically, by the way, these sorts of changes tend to be split in terms of the benefit between buyers and sellers. People looking to move with decent levels of equity in their property. I mean, suddenly, if you got the right side of this overnight change, suddenly the cost of moving up the property ladder, let's say, or selling a flat and moving out into the countryside or to a village or a town, suddenly that got cheaper for those people, and second or multiple property owners who are looking to add to their stock in the current climate will have also benefited. Not to quite the same degree, but nonetheless they've benefited. Now, how do second homeowners benefit from this? A lot of the media around this says, this was a move to try and support the property market. A lot of people thought, well, surely that means first-time buyers, the people at the bottom of the ladder, need to get the main boost. But actually, it's boosted quite a few other parties. So with second homeowners, yes, there is still a 3% surplus rate of stamp duty. That's not new. That's not something introduced by Rishi Sunak this time around. And they will have to pay that, but they're paying it on a lower base, thanks to the removal of stamp duty up to £500,000 for somebody who is, let's say, not buying a property as part of a portfolio. So on a £400,000 buy-to-let property, the stamp duty, there is still stamp duty, would be £12,000, whereas it was more like £22,000 before this change. So there is still stamp duty to pay. The 3% surplus hasn't gone away, but the effect of introducing this £500,000 nil rate band, if you like, to which the 3% is then added, is to substantially reduce the amount of stamp duty on a buy-to-let. And that creates a bit of a headache for first-time buyers. The fact that this break applies across the board, means that first-time buyers, who a lot of people thought might be the ones that would be targeted by such a move, haven't had it quite as easy as they would have liked. So it's still tough buying a first home, even with the stamp duty break. Why? Well, basically, as I mentioned, sellers have jumped in and asking prices, according to Rightmove, have risen. Now, an asking price is not a completion price. Just because you want to sell your house for a certain price doesn't mean you will. But nonetheless, prices have risen post-lockdown. And for a first-time buyer, that's actually not terribly helpful. Sales are taking a long time to complete, and that increases the risk of a chain failing. So because there's been a bit of a rush post-lockdown, if you like, an awful lot of people are trying to get surveys done, trying to get valuations done, trying to get mortgages organised. So chains are at risk of failing. And for first-time buyers, that's another factor. And mortgage conditions, perhaps most importantly, are pretty difficult. So just take HSBC. The minimum deposit now is around 15% on a flat as a first-time buyer and 20% on a new build. So basically, if you're looking to buy a new build property, you've got quite a lump of equity that you need to come up with in order to make the purchase. So first-time buyers are being hit from 2 or 3 directions, if you like. Prices rising, sales taking a long time to complete, and deposit requirements not really going in their direction. Further out, there are a few things to watch out for as well. Basically, the stamp duty holiday is due to end next year, and when it does, some analysts worry about a cliff edge. In other words, there's been a huge surge of activity, people trying to take advantage of this cash saving, and that could all suddenly grind to a halt. So watch that space. Will the Chancellor extend the holiday or not? Unemployment is likely to rise for a while yet. So whilst this move has, it seems, boosted the housing market, with furlough schemes ending and companies laying off staff, that can't ultimately be great in terms of underpinning property prices. And negative equity is therefore a risk. So anyone going into the property market at the moment needs to bear that in mind. It's the reason why mortgage companies are raising the minimum level of deposit required. Now, negative equity isn't a problem, provided you can afford the mortgage on the property and it's a property you plan to stay in. But I'd suggest this is no environment for people to just jump onto the property bandwagon, grab anything that A, they might not be able to afford in a year's time, and B, they might not even want to be in a year's time. So tempting though it is to rush in right now, personally, unless I was pretty sure of what I was after, I probably wouldn't. So there you have it. Editor@killick.com with any questions. I've got other videos as well on buying property, so that's killick.com/learn. And if you'd like to receive a copy of any of my guides, my how-to guides, then do feel free to email me, editor@killick.com, and I'll be happy to organise that for you.